I believe we are soon gonna see all-time highs in the stock market, in Bitcoin, and in quite many other markets. And in this video, I want to talk why. I want to talk about money supply. I want to talk about price manipulation and how many people actually don't know how to read facts, but they prefer opinions. So stay tuned. It's going to be a fun video. Let's dive into the details here. Hey and welcome to today's video. My name is Julian. On my channel, it's all about investing, mostly cryptocurrencies and Bitcoin. It's this mission to make people crypto fit for the world of blockchain, decentralization, cryptocurrencies, altcoins, but I want to be fair, most of all Bitcoin. Obviously, we talk about other investments as well, stocks, precious metals, real estate, but again, 80% is probably on Bitcoin. And today I want to talk about a topic that I feel many people have strong opinions on, but they're not really fact-based. And that's a massive problem, because if you make decisions on opinions rather than facts, most of the time your decision-making is quite subpar. And so what I want to talk today, and I prepared a small little slide deck, 12 slides. I'm going to go this through, and I'm going to give you a bit of my personal kind of facts that I can kind of draw out. And I want to kind of show you a bit why I believe we're actually going to see all-time highs in pretty much most of the markets. And nevertheless, what's happening out there. So it doesn't matter if we see a second wave in COVID-19, no matter if these unrests all around the world are getting worse. Yeah, it's quite irrelevant. And I'm going to show you why. So I'm going to go into a screen share and kind of walk this through a bit. Now, I've been doing the same Twitter poll for almost every week for the past 2 months. And every single poll was pretty much the same. And I always asked, what do you think about the stock market? Do you think we're going to see a new low over the next couple of weeks with COVID-19? And the result, since the beginning of April, and we're recording this beginning of June, the result has been the same every single time. Now, it fluctuated slightly, but at the end it was always that the majority of people believed that there was a new low ahead. Majority of people. And now here on this vote, there was 524 votes. I had, obviously it depended. Sometimes people got sick of me asking, but at the end it was, sometimes I had over 1,000 votes, right? And the result was almost kind of always the same. It was mostly the majority believed that there will be new lows ahead, that there was not going to be an uptrend, that everything was going to crash, and so on and so on. And that is very interesting, because obviously, in hindsight, obviously we know, but if you have been around me, or you've been listening to me, you have been watching my videos, you've been following me on YouTube, you know that since the middle of March, since we had this massive crash, I've been massively deploying capital in various markets. Obviously extremely successful. And this had nothing to do with me being super smart or being super lucky. It just had to do with actually looking at the facts, looking at very basic principles. And most people really struggle doing this. So, okay, the result is very clear. Now, I can show you pretty much any kind of market, except for, let's say, oil, right? Let's remove oil. But anything else other than oil, it doesn't matter if I show you the Bitcoin chart here, if I show you stocks, it's completely relevant. All these charts over the past couple of weeks kind of have the same thing. They all have, and you can call this either a V shape, you can call it a U shape, it doesn't matter. But we see recoveries left and right. Now, Bitcoin is not at an all-time high, obviously. The Nasdaq is actually close to an all-time high, and I can actually think that in June we're going to see an all-time high in the Nasdaq. And I personally think that we're going to see a similar shape or form in pretty much all the markets. And this is completely contradictory to what many people actually post and what many people talk about. Because what they are saying is, okay, but Julian, this is absolutely ludicrous. I mean, this is just ridiculous. I mean, look, we had this pandemic. What happens? The markets go up. We have a full economic lockdown. What happens? The markets go up. We have a new announcement, 30 million people unemployed, markets go up. China, crisis, markets go up. We have all these riots and civil unrest right now, not only in the US, we actually see this in Australia, we see this in Europe, we see this in Hong Kong, we see this in New Zealand. What happens? Markets go up. Now, how does this make any sense? The thing is, you're putting in opinions here. You're just showing me a very small part of the facts. And this is extremely dangerous in all of this. And I made a Twitter post in this. And trust me, whenever I make these Twitter posts, I get so many messages under those Twitter posts where people say, oh, Julian, you don't understand economics. Oh, markets are going to crash. You have no freaking clue. Now, let me say one thing. Of course, markets might crash. You might be right. But I think it's very unlikely. I think we're going to see all-time highs in most of the markets. And obviously, this is an opinion. But opinions don't matter. What really matters are facts, and people struggle with this. They struggle putting their opinions aside. You see this in anything. You see this in politics, you see this in religion, you see this in crypto, you see this in sports. It's very, very, very difficult for people to put opinions aside. And actually, most decisions by people are made to be congruent with past decisions, right? So if in the past you believed in God, you will believe in God because you are congruent. If in the past you have supported a certain political party, you will do the same thing going forward, because otherwise you were stupid in the past and you don't want to admit that. The same with the cryptocurrency. That's why you're hodling a shitcoin all the way to the bottom, because otherwise you would be incongruent. The same with any decision making. Well, if in April you said the market's going to crash, now you're still going to say the market's going to crash. You're not going to change your opinion because you want to stay congruent. And that is because humans have such a large tendency to base decisions on opinions and not on facts. And there's some very important famous quotes, right? When the facts change, so should your opinion. But when the facts stay the same, so should your opinion. And it's really, really, really difficult for people to do this. And I believe one of my strengths that I have learned over time, because otherwise I just kept losing, was to constantly challenge my opinion that I base, and I try to open my opinion over and over again on facts. And I think if you start doing this, I'm not saying you're always going to be right. That's actually impossible. But you're going to be right more often. And so why do I mean this in this sense? Why am I quite confident that we're going to see an all-time high in the prices? Well, it's because of the entire nature of how actually things get priced. And this is what most people don't understand. They only look at this part. Now, they are missing a humongous other part of the equation. What do I mean in this entire thing? Well, and I made another tweet on this. And I said, comparing any price of now to a past price in the market is meaningless. And it became meaningless. And the reason this is true is because it's like changing how long a foot is and saying, wow, I'm on such a growth spurt. Last year I was just 5'10", but now because I changed how long a foot is, suddenly I'm 7 foot. What a miracle. I have been on a growth spurt and I'm even 34. Now, the actual thing is, what's been happening is, it's people making a bet how much you weigh. But instead of you going to the same scale that you've been using for the last years, people putting little stoppers under the scale. So when you step on top of it, it's impossible for you to have the same weight because the weight is being stopped. There's no way for the weight to go, for the scale to go further down. So you keep eating as much as you want, you're not gonna get heavier. But you're not gonna get heavier because you're gonna get heavier. It's just the scale changed. And that's what people don't understand. Looking at the price, and that's a key thing. Price is nothing else than a formula of supply and demand. But this supply and demand is measured in something. And we measure this in US dollars. And that's the key thing. One of today's US dollars is not the same thing as a year ago's US dollar. It's completely different. And if you don't believe this, you need to really learn to look into so-called money supply. And this is actually from Wikipedia. You can just look this up yourself and you can see all the different types of money supply, right? You have M0, M1, M2, M3, and so on. And just to really quick, I'm not going to go too much into detail here. You can read this up in detail yourself. But basically, M0 is the money supply of all notes and coins in circulation, right? That's pretty much the entire thing. All notes and coins that are in circulation. Now, in M1, there's other things that get to it. There's actually deposits, there's checks, savings accounts, right? So that's M1, so it obviously gets more. So M1 is larger than M0. And then M2 gets way larger because here we have savings deposits, and we have time deposits. So it gets insanely large. And then we get to M3, and in M3 we even have those large time deposits. We have market funds, short-term repurchase, repo markets. So that gets humongous. So all you have to do is, because that's the measure stick, right? That's the measuring stick. Well, let's just look it up. And one thing we see is, we see obviously the measuring stick change, and now suddenly it's starting to spike. Now M2, same story, it gets even crazier, right? So this is the percentage change that we see at the moment. So the measure stick just completely changed. So when people look at Bitcoin today, they look at stocks today, and they look at a price and they see, and that's the trick here, right? So they go to the trick and they say, man, the Nasdaq is close to its all-time high of 240. That's the same thing as me stepping up to a measure stick and say, holy crap, I just grew. Last year I was 5'10", now I'm 7 feet. It's irrelevant. I'm still the same size, and these things are still true. It's just irrelevant because the entire measuring stick changed. And that is as such a key concept. And so I'm very, very confident that actually prices are going to keep going up. You know why? Because the Fed has said they're going to keep putting little plugs under the scale. So even if people get heavier and heavier and heavier, the scale is not going to show it. Even if people stay the same size, they're going to change the measuring stick, so they keep growing, and that is a very, very important part in the entire concept, right? So if you want to see facts, then try to see all the facts. Don't just pick out, don't just share these things on Twitter and say, man, markets are totally irrational. Markets are going up even though we have all this trouble. It's completely irrelevant because the measuring stick gets changed over and over and over again. And that is the very key part. And actually my major advice for you, right? And this is what people, again, don't really want to hear or they don't like to know. Don't try to make bets. Try not to be wrong. Most people, because it sounds so cool, they go in for something what's called alpha, right? So alpha means you outperform. Alpha is one of the hardest things to achieve in investing. And it's actually so difficult that there is a super tiny percentage in the world that actually consistently gets alpha. And really, I mean it. Like, this is like, there's more gold medalists than people who consistently get alpha. It's extremely difficult. Here's also a trick. Alpha is not what Jeff Bezos is getting with his money, because Jeff Bezos is getting money on his own work. He's building Amazon. That's not alpha. Yes, it is alpha, but it's a different kind of alpha than, for example, what a Ray Dalio does or what a Warren Buffett does. What most people should be going for, right? Most people, is what's called beta. Beta means you go for the average. And trust me, there's already the majority of people who are not even getting beta. And I'm going to show you my beta for this year so far, right? I'm quite diligent when it comes to number crunching. I'm someone who really likes these things. I like to make bets, but for me, I'm very calculated. I'm very mathematical about it. I don't believe much in opinions. I couldn't care less about what someone thinks on Twitter or what someone says on YouTube. The only thing I care about are the results, are the facts. But most people, because they are going for alpha, they constantly actually lose. They constantly actually underperform even beta. And beta means you're not really going for outperformance, you're going for an average. And you get the average by using uncorrelated investments. They kind of cancel each other out, that you're not going to get those super massive returns. You could, but you hardly ever get those super massive returns. But you can, right? So for example, when I was investing, I've been investing in basically in beta since I lost all my money when I was like close to 22. And when I lost pretty much all my money, I was so fed up with all this that I said, you know what? I'm not gonna keep doing this crap because I was constantly going for alpha. I need to learn how not to lose money. And that was what I then did. And since that point, I have had really good returns, and there were extraordinary returns. Bitcoin, for example, one of the most extraordinary returns, but it was part of my beta strategy. And I just want to show you some of the things, right? So we're talking about a year that many people, 2020, call one of the worst years ever, one of the biggest liquidity crises ever. Most people are like completely underwater. Now, a solid beta portfolio, and that's purely built on numbers, right? And I'm not gonna reveal my portfolio because this is not the point here. First of all, I'm not an investment advisor. So I'm not gonna go and say, these are the kind of stocks that I have, this is how I diversify. Because at the end, everyone has to make up their own decisions. It's all about understanding these concepts. Now, this is from year beginning until this day, today. And this portfolio, that's just a complete, like, basic portfolio. I call it Julian's relaxed beta portfolio, right? Why? Because I don't worry at all about it. And the majority of my funds actually are in this portfolio. And year to date, this portfolio is up 10.1%. But that is with a super diversified portfolio. This is not aggressive. And I'm actually going to show you what was the maximum drawdown this year. Maximum drawdown. When the entire world was melting down, I'm going to show you how much percent I was down. And then you understand why I prefer this kind of approach than this like complete nervous left and right. I need to, should I go in, should I go out approach, right? That's the very key thing. Read and learn about beta portfolios. So here's the key thing. Most people, 99% probably, are actually underperforming the 10.1%. They're underperforming this. But why? Because they want to go for 100%. And by trying to do that, they actually constantly underperform. And that has to do with pure investment portfolio strategies. Because they are constantly underperforming. Constantly. So to me, if you're making less than 10% this year, so far, in your entire portfolio, year to date, beginning. So I'm not talking about your income, I'm purely talking about your investment. If you have made less than 10%, you need to kind of reevaluate your entire investment strategy. And you need to reevaluate how you go about investing into certain things. Very important. Now here's the other thing. Some people are like, yeah, I actually outperformed this thing completely. I made 50% so far. I get it. I mean, it's not that difficult if you're investing, for example, in this thing here that's up 34% here. Obviously, you would outperform this by a lot. But here's the other question. If you had invested January 1st, what was the maximum drawdown on 23rd of March? And for me, the maximum drawdown was minus 2.6%. So that's how much the entire portfolio was minus this year, when the entire world had a meltdown. Now, I'm not super smart. I'm not the best investor. All I'm doing, and that's the big difference, is I'm investing based on facts and not based on opinions. And I can so encourage you to do this, because when you start understanding this part, how not to lose money, that's the very first point actually that you could actually start to thinking about how to make money. Because when the entire world melts down and your entire portfolio is down 2.6%, it gets a lot easier to think, you know what? I'm actually going to be super aggressive right now and I'm going to invest in Bitcoin because Bitcoin is down minus 50% this year. I'm going to start investing in certain stocks because I always wanted to buy those stocks and they make a lot of sense right now. You can do it way easier because your emotions are not taking over. And your emotions only not take over when your risk gets down by a lot. I've backtested such portfolios for the past, 20 years, 25 years. You can backtest these portfolios 60, 70 years. And at the end, these portfolios hardly ever draw down more than 10, 15%. They're also not going to return 100% per year. Don't get me wrong, I do understand. They return in a great year, they return 20%. In an average year, they return 7, 8%. But that is how real strong wealth is actually built over time, believe me. And that is maybe the thing that I want to give you here. look at the facts. Don't look so much on your personal opinion. It's a very, very important concept. So I hope you get some value at this. If you do, follow me on various channels, on YouTube, on Twitter, or wherever you're watching this, on LinkedIn. Also, if you want, check out my company, Cake. We provide cash flow or crypto flow from cryptocurrencies. Very interesting to invest in cryptocurrencies, obviously in Bitcoin and Ether right now. Getting cash flow from those cryptocurrencies even more cooler because you're kind of protecting yourself from inflation and deflation. So try this out, check this out. I'll link it up down below, and hope I'll see you as one of our users there, and I hope I'll see you at the next video. Thanks so much. See you next time. Yours truly, Julian. Bye-bye.